What's going on, everybody? So today I'm going to be teaching you how to escape the break-even stage forever. Okay, now I mean it, forever. So let's get into this video. So right now, this is probably you. This is how you're feeling. You are in the break-even stage, struggling to pass it, and it is exhausting, okay? And I know the feeling, trust me, do not worry. By the end of this video, we will be from the break-even stage and you'll skyrocket out to then become profitable. So you will understand why and how to break out in this video. So this is probably how you are feeling currently. You have a winning streak and then a major loss. Winning streaks make you feel cocky and you ease up on your rules. Then you can see we move down, we lose that equity curve, and then you lock back in down here and you get your account out of drawdown. Then we have the same repeating process that happens again, and then we move down. So this is your break-even stage. So how are we going to get out of this? We have 4 main pillars we're going to go over in this video. So the first one is strategy refinement. Okay, so strategy refinement allows you to filter the low quality trades, giving you a way more consistent result. Strategy refinement equals model mastery. It is so important that you master one model as well. Having multiple models won't allow you to have this strategy refinement. You need to do it of one model specifically. Mastery of a model will instantly aid in the breakout of the break-even stage. So this is such a crucial role within these key points that is going to help you to get out of that break-even stage. Every single one of these pillars is, to be honest. So model mastery equals selective trading. Selective trading equals higher quality trades, removing stupid losses. So before, this is what you were doing. You were win, forcing trades, loss, win, loss, loss, win, win, loss, loss, 40% win rate, which is not ideal. And then after you filter the trades, you have a win after a longer period of time, and another win after a longer period of time, and then a loss and a win, which comes to an 80% win rate overall. So it's important over the same time period, you could have taken all these trades, but they might not have been a high quality trade, to then filter it down to the lower, to a lower amount of trades you're taking, but a higher quality. And this is what you need to be doing. So before, higher quantity trades equals lower consistency and quality, and the lower quantity trades is higher consistency and quality. Very, very important. Make sure you guys are getting that down. And then moving on to the pillar 2, make sure you guys are taking notes. You don't get profitable chasing money. You get profitable becoming the person who follows rules regardless of money. So when you are focusing on money, you'll have a clouded judgment. You break rules only because your value of money is more important to you than discipline. Confidence comes from doing what you say, not winning trades. So sticking to your rules, sticking to when you're going to take one trade a day. That is what gets you to that profitable stage, not taking loads of trades and breaking them because you're focused on money. Long-term success equals identity consistency, not result consistency. So to achieve long-term success, you need to have a consistent identity, which is not going to be there if you are focusing on attaching your identity to the outcome of your trades. Because if you don't have a consistent outcome, then you're not going to come to the table, you're not going to come to the trading day with consistency, meaning it's going to reflect on your trades. And it's a bad cycle. They sort of switch between the two. Okay, so here we have a trader. Outcome driven by identity. You need money, you overtrade, you are emotional, inconsistent, short-term highs, and long-term failure, which we do not want. You want to be the process-driven identity, which is I follow my rules. Selective execution, neutral, consistent, okay? So long-term profitability, stability. This is very, very important. You obviously want to have that consistency of your trading, not just those short-term highs and the long-term failure. So moving on to pillar 3. Inputs over outcome. Trading destroys the common belief that more work equals more results. And I definitely 100% had to understand this. This is one of the hardest things for me to overcome. So 12 hours on the charts does not equal profitability. One high quality decision equals 50 is better than 50 random trades. I cannot stress this enough, that one high quality decision or one high quality trade that you filtered out is way better than just 50 random trades, right? Overworking is avoidance plus emotional trading, which we want to avoid at all costs. So trader A, we have 12 hours on the chart and 5 hours on YouTube. and 5 random trades taken. Trader B, we have an hour and 30 minutes on the chart, 1 clear setup, 1 high quality trade. So the only question that matters each day, did I wait for my setup? Did I follow my rules? And did I manage my risk correctly? If you had a loss, but these are all a yes, then it is not a bad problem. It is a good problem, and is a good thing, sorry. And this, I don't know why I drew a beehive there. This is the most important thing you need to be asking yourself as well. Would my mentor be taking this trade? So if you do have a loss, with all these being yes, it's a good loss, and it's a loss that you should not be disappointed in. And last but not least, we have pillar 4, the validation trap. When you are trading to feel validated, your emotions are in control. Overtrading equals trying to prove that you aren't wasting time. Losses hurt more because they attack your self-worth, and the hamster wheel equals chasing emotion, confirmation, not edge. So trying to prove that you're not wasting time, you might be a year into your trading, but you haven't seen any results yet. And I know that's hard, especially when you have people asking you how it's going and stuff like that, which is why when I first started trading, I decided not to tell anyone except for myself and my other half. That way you're not putting added pressure onto yourself, especially with these questions here. So you're not having to prove yourself to people as well. But like trying to prove yourself to yourself is hard in the first place, so trying to prove yourself to other people as well is even worse. Losses hurt more because they attack your self-worth. This is when your trading is directly impacting your identity, which we do not want. You want to separate your identity from your trading as much as possible, because everything can go downhill. Everything becomes way more emotional when your identity is attached to your trading. So the hamster wheel, let's actually go into this. Here we have our little hamster on the wheel. So let me zoom out a little bit here. There we go. So this is you, and we're going to go anti-clockwise here. So you take a trade and you think, okay, I'm good at trading, I'm going to do this now. And then you take a loss and you think, oh shit. So you take another to get that validation, and then you overtrade. So this is revenge trading and overtrading right here. Then you take another loss, and then you repeat the cycle. So this is what keeps you in that break-even stage, or even a losing stage. So you need to break out of that. You need to break out of the hamster wheel, and you need to simplify your trading and filter your trading through a quality grading process, which you will make yourself. So I hope that has cleared things up. Do drop a comment if this video has helped, and if you've watched this far, comment IFVG to let me know. Okay, cool.